In terms of cryptocurrencies generally, I can say almost with certainty that they will come to a bad ending. It's ingenious and blockchain is important, but Bitcoin has no unique value at all. It doesn't produce anything. You can stare at it all day and no little Bitcoins come out or anything like that. It's a delusion, basically. If I could buy long-term puts, if I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short it.
We are going to get Warren Buffett's take on Bitcoin today. He is widely regarded as the best investor in history. Regardless of how you feel about cryptocurrency, it is important to watch this video all the way through before making any judgments on its subject matter. According to Charlie Munger, if you want to have the right to disagree with someone, you need to be able to state their case better than they can. Once you've done that, you've earned the right to disagree with them.
Well, when you buy a farm, you look at the crop every year and what prices are, and you decide whether it was a satisfactory investment. I mean, you look to the asset itself and what it produces for you. When we buy a business, we look at what the business earns and decide how we feel about it in terms of what we paid. But we are buying something that at the end of the period, we not only have what we bought in the first place, but we have something that the asset produced. And when you buy non-productive assets, all you're counting on is whether the next person is going to pay you more because they're even more excited about another next person coming along. But the asset itself is creating nothing. One of the interesting things, for example, is gold. If you go back to the time of Christ and you look at how many hours of labor you had to give up in order to buy an ounce of gold, and you take it forward to now, you'll find the compound rate maybe 1/10 or 0.2%. And then you have to insure it during that time and make sure somebody doesn't steal it from you and everything. But it doesn't produce anything. And productive assets, you can pay too much for a productive asset. But I bought a farm in the 1980s, and every year look at how much it produced the way of soybeans and corn. And at the end of that period, I've still got the farm, and I've gotten some significant income off of it. Apartment house, operating business. But if you and I buy various cryptocurrencies, they're not going to multiply. They're not going to be a bunch of rabbits sitting there in front of us. They're just going to sit there. And I got to hope next time you get more excited after I bought it from you, and then maybe I'll get more excited and buy it from you. And actually, we could sit in the house by ourselves, and we could keep running up the price between the two of us. But at the end of the time, there's one Bitcoin sitting there, and now we got to find somebody else, and they come to an end. I mean, those.
So, that's a greater fool theory. That's what you're saying.
Well, yeah, it's buying something because you expect the pool of people who want to buy it because they want to sell it to somebody else will grow, and it's wonderful because it does create a rising price, does create more buyers, and people think I've got to get in on this, and it's better if they don't understand it. That's the other thing about non-productive. If you don't understand it, you get much more excited than if you understand it. I mean, if you buy a bond that says it's going to pay you 4% a year, you're not going to get any pleasant surprises. She's going to pay you 4% a year. But if you can have anything you want to imagine. If you just look at something and say that's magic, you can do it with shark's teeth or seashells or anything. And they did it with tulips in the 17th century in Amsterdam, and they'll do it again. I mean, people, they like to speculate, they like to gamble, and if you can get something, particularly if you have something half plausible going on. If you had bought gold in 1942 and you say, we might lose the war and we might have to run off to some other country, and so let's put our assets in gold, you would have less than a penny for every dollar you got from owning stocks. Less than a penny. Now, if somebody calls that a store of value, I mean, I think they're delusionary.
Warren Buffett, considered the greatest investor of all time, and Charlie Munger have taken a strong stance against cryptocurrencies, as they do not produce anything and there's no unique value associated with them. When considering investments, they suggest looking at what the asset produces and if it is possible to make a profit. They are concerned that people are buying into cryptocurrencies with the expectation that the next person will pay more and the cycle will continue, which could lead to a bad ending. Gold has been a valuable asset for centuries. However, it does not produce anything. Productive assets such as farm can produce income and still remain in the owner's possessions. Cryptocurrencies are an example of a non-productive asset, as they do not produce any tangible output. Instead, the value of these assets relies on the greater fool theory, which suggests that the pool of buyers will grow as people become more excited about the asset, regardless of whether they understand it. This was seen historically in the tulip market of Amsterdam in the 17th century. People are naturally drawn to speculate and gamble, and non-productive assets can provide a plausible opportunity for this.
Well, those who know me well are just waving the red flag of the bull. Of course, I hate the Bitcoin success. And I don't welcome a currency that's so useful and to kidnappers and extortionists and so forth, nor do I like just shuffling out a few extra billions and billions and billions of dollars to somebody who just invented a new financial product out of thin air. I think I should say modestly that I think the whole damn development is disgusting and contrary to the interests of civilization, and I'll leave the criticism to others.
When considering investments, it is important to understand that non-productive assets such as tulips and drawland will not produce anything aside from a supposed scarcity. If an asset is non-productive, then it is dependent on someone else later on buying it with the hope of selling it for more money. Productive assets, however, are more reliable investments as they produce something tangible such as crops or taxes. In order to make money off of an asset, there must be more people coming into it than leaving it, which is why it is important to consider the productive capabilities of an asset before investing. Cryptocurrencies have been known to generate extraordinary returns in the past. However, it is likely that the asset class will come to a bad ending due to its tendency to attract those of less than stellar character. Charlie believes cryptocurrencies to be a form of dementia and that professional traders who engage in trading them are disgusting. He further states that he would take a negative position on Bitcoin if he could, but due to his lack of knowledge on the subject, he will not do so. Ultimately, it is believed that cryptocurrencies will come to a bad ending, although the timing of this is unknown.
Cryptocurrencies basically have no value and they don't produce anything. So you can look at your little ledger item for the next 20 years and it says you've got X of this cryptocurrency or that. It doesn't reproduce, it doesn't deliver, it can't mail you a check, it can't do anything. And what you hope is that somebody else comes along and pays you more money for it later on. But then that person's got the problem. But in terms of value, zero. I don't have any Bitcoin.
You don't?
No.